As of this morning, crude seems to be under a bit of pressure. It closed flattish yesterday after the OPEC decision, which was as expected. To my mind, I think it's quite balanced right now. So I'm looking at factors including, of course, the OPEC decision to maintain its tapering, which was expected and largely baked in. I'm looking at the shut-ins, both offshore oil production and in terms of refining facilities in Louisiana, in the US, in the wake of Hurricane Ida. So that's going to continue to tighten US markets, US supplies, and drain US inventories, which I think is bullish. I'm looking at COVID, of course, on a global level. The case numbers have been plateauing, but on the flip side of that, we have the new variant of interest called mu that the WHO talked about yesterday. So all in, I think largely holding pattern for crude prices for now.
If we bring in Goldilocks into the story here, and we sort of look at the scenarios of prices that are either too hot, too cold, or just right, is 70 a good level overall? Because, you know, it allows a number of the oil companies to remain profitable, but it's not too hot as to hurt economic recoveries and also give a major headache to central banks who are worried about inflation.
Yeah, Mandy, your question and the way you've articulated it might be more interesting than my answer. So we know Goldilocks numbers for oil prices are different for consumers and producers. But in general, I would say a $70 per barrel Brent price, where we are about now, is all right. It's okay. It keeps the producers generally happy. And the oil consumers, major consumers, especially here we have, the price sensitive consumers as well, like India, not too unhappy. So again, no surprises there that OPEC stayed the course. I think where prices are would have been probably a major input into the decision.